Welcome back to the Dividend Diplomats YouTube channel. You know you're rocking with your broskies. You got B&L over here, the Dividend Diplomats guys, and we've got two Dividend Kings we want to talk to you guys about today.
But before we do, smash that subscribe button, everyone. Give this video that biggest thumbs up you can. First, everyone, thank you for helping us cross 16,000 YouTube subscribers. It's been quite the journey. We appreciate all your support so far. Now let's get that journey to 17, 18, 19, and then eventually 20,000. Let's freaking go.
Onwards to 20,000, guys. Appreciate the love and the support. We're trying to get into the videos quicker for you guys because I know that's what you guys want to see and hear. Didn't quite get to 400 likes on the last video. It's all right. Sitting at 267 at the time of this video. So just in case that layer gets peeled, we'll send out some more swag to everybody here.
Yeah.
But guys, this stock market, my gosh, another weird week. Ending. Market actually finished up thanks to Friday here on March 3rd. S&P 500 is over 4,000 and was up about 1.3%.
That's right. It's a weird market. It's nothing more to it. It's just a good reminder, though. When something meets your metrics, buy it. When it passes your screener, you think it's undervalued, just grab it. A share or two here or there. You can average down if it goes up. If it goes down, if it goes up, okay, it's still undervalued. You got your shares at a lower price when you wanted to. That's the importance of just keeping it simple, sticking to the metrics, and acting. And that's why this video is going to be freaking awesome, Lanny, because you found two Dividend Kings that are on sale that are showing some nice signs of undervaluation.
No, we did. We got one that you own over 100 shares a piece between you and your wife, and another one, slap it to a nice little piece of meat over here as we rip through, one of the glorious pepperoni brands. Guys, we're talking about Johnson & Johnson. Ticker symbol is J&J, and Hormel, ticker symbol HRL, whom we rarely feature here on the Dividend channel. We're going to look at these two Dividend Kings, Bert, because they've had a rough road the last couple of weeks, and they're actually both down over 10% here in 2023.
That's what we look for. And how are we going to look at them? Using the Dividend Diplomat stock screener. 3 metrics: 1, PE ratio less than the S&P 500. 2, payout ratio less than 60%. 3, history of increasing those dividends, where you'll get the 5-year growth rate and how many years in a row you've increased those dividends. And number 4, that bonus metric is the dividend yield.
Exactly, guys. And, speaking of Hormel, don't talk about them too often, but I'm pretty sure everybody's familiar with Hormel chili, the pepperoni, corn nuts, the Embasa sausage, just to name a few brands. Justin's peanut butter and almond butter. I think you guys are all familiar with that, a little bit on the healthier side.
Yeah.
And then Jimmy O's ground turkey products obviously is pretty popular as well.
It's fantastic. And you brought up a good point. It's not really featured much on this channel because it's not easy to find Hormel when it's showing signs of undervaluation. It's a stock that historically trades for a premium for a reason, because they are a Dividend King, because of how strong those brands are that you just mentioned, Lanny. So finding a time where you get a chance to buy Hormel, when it hits that zone, you have to take a serious look at it and act if that's what you want to do.
That danger zone, that buy zone, because I am the game. So guys, Hormel, pretty interesting, because Bert just talked about the Vanguard ETF about consumer staples, and you better believe Hormel is considered a consumer staple here today.
It is. Pepperonis are flying everywhere in your house. Lanny, you can't
no
open
stereotyping.
Yeah. Yeah, that's right. You've actually replaced all the keys on your keyboard with little pepperonis with the letters put on.
Those pepperonis, guys. I usually in the morning I pour a bowl of nice pepperoni cereal with the milk.
Yeah. Oh, it's beautiful. Just beautiful.
Oh,
but all right, so let's talk Hormel then. Let's start running them through the screener and see why they popped up on your watch list. As you said, they're down 11% year to date, down 21% over the last 52 weeks. But see, that price as of 3/3 close, 40.63, that forward EPS is $1.83 after earnings. P ratio is 22.2.
Yeah. And Bert mentioned $1.83 per earnings. That's part of the reason why Hormel's stock has been declining and why we're talking about them, because they did just announce their EPS was 40 cents on revenue of almost $3 billion. fell a little short of expectations,
Yeah.
which that's what sent the stock down on Friday, March 3rd. Now, to dive into that payout ratio, that second dividend metric, this is a dividend king, as we mentioned, and we have to look at the safety of a dividend king's dividend here. More than likely, we're probably okay. Right now, it's actually at 60.11% based on the $1.10 per share per year, broken down in 27.5 cents per share per quarter. So it's right at that ceiling. My Italian poofy hair is like trying to.
Yeah, I don't know, Landy. If it were at 60%, I'd be fine. But now that it's at 60.11, I don't know, man. I don't know why you're putting this on your watch list with those extra. I'm kidding, of course. You're right, though. That's exactly what it is. Just bumped up. Still, we use 60%, just something to monitor and just something to watch here. We just want to make sure it doesn't sneak close to 100%. 60% gives you plenty of room.
And again, it's hard to find when Hormel stock drops as much as it has. Again, down 11% this year, down 21% in the last 52 weeks. So you got to keep that in mind.
Yes.
Now we're looking at this growth rate, Bert. How many years has this dividend king? We already know it's 50, but how many years, and what's the average clip that they do it at?
Yeah, not 51, not 52, not 53, but 56 consecutive years. And their 5-year dividend growth rate is a solid 8.66%, which is great for a consumer staple stock like Hormel.
Yeah, and I know the last increase was, I think, just over maybe 6%. I'll have to go back and do the math. Which, hey, during this time period,
great,
take it.
Yeah, absolutely. And what the growth will be in 2023, who knows? It's going to depend a lot on what happens with inflation, but expect more single-digit dividend increases for Hormel in the short-term future. Probably a little bit below the range, but who knows? So now, Lanny, let's move into it. Price has fallen. You've already teased plenty of times that the price has fallen for Hormel. What is the dividend yield now that the stock price has come down?
As the yield is now over 2.7%, which is almost 2 times the S&P 500's, or VOO's dividend yield, if we actually look at it like that. So it's rare that it's over 2.7%. If we actually look at quickly, the 5-year dividend yield on average for Hormel is around 2.06%. So you're at 65 basis points above the 5-year dividend yield average.
Great point. There you go. There's another potential sign of undervaluation there. Lastly, the market cap. I just always think it's interesting when after putting this in there, it's not as large of a company as you think. Of course, it's a large company. $22 billion market cap is great, but when you compare it to Johnson & Johnson, Procter & Gamble, some of the other mega consumer staple stocks, Hormel's not that large in comparison. So $22 billion market cap for HRL.
There it is, guys. It's got a 22 PE, 60% payout, 8% plus dividend growth rate for over 56 years, with the yield now swelling up to 22.7%, 65 basis points above the average. Bert, is it time to release the second dividend king that we just mentioned, the J&J? You've got to do the honors, brother.
The king of kings, Johnson & Johnson. Old, reliable. Why is Johnson & Johnson stock price back in the mid 150s again? Because of the lawsuit that's going on. They didn't get the best ruling a couple weeks ago, which might have exposed them to a little bit more liability than what people were expecting. Stock price came down accordingly. There's going to be some uncertainty as well going forward until you get more news with the lawsuits. But you know what? It's still a dividend king. It's still showing signs of undervaluation, especially now with it coming down, which makes perfect sense, Lanny, why this is the second company that's on your watch list.
Yeah, and I've been buying shares. The prior week, I was able to, I think, scoop up maybe one share. This past week of February 27th through the March 3rd, I think I grabbed one share in the 152-ish range. Bert, this first dividend stock metric now, this PE is getting really interesting because the analysts are expecting $10.51.
Yeah, and with their price at 154.02, that's a P ratio of 14.65. We'd always said historically Johnson & Johnson is between 16 and 18. That was always our unofficial mark of where we expected Johnson & Johnson to be. Now that it's 14.65, it's well below what we've expected. So it's interesting. I might even have to come off the sidelines here soon and add 1 or 2 more shares if it keeps dropping at this price.
The tag in.
Yeah, tag in. All right, let's look at the
tags
second.
In Road Dog Jesse James.
Yeah. All right, let's move to the second one. Dividend is $4.52. They're going to be increasing it here in April. Not expecting the largest increase, but that's another story for another day. Payout ratio is 43%. So hey, plenty of room to keep growing that dividend, and it's in that perfect spot of ours, which is 40 to 60%.
Yeah, really nice spot right now. Again, even if earnings plummeted, even if earnings was cut in half, it's still below 100%, which is always a nice safe sign. And as Bert mentioned, we'll have a dividend increase coming up here in April. Literally in about 5 to 6 weeks, we'll have an increase coming to add on to that 60 plus years of growing their dividends at an average rate of over 6%, which is why they are considered good old reliable, the king of kings.
That's right. And now the price fall and their yield is very close to a milestone mark for Johnson & Johnson. Their yield is at 2.93%.
Wow.
Just a hair below 3. I can't believe they're getting close to 3% again for Johnson &
Yeah,
Johnson. Absolutely incredible. Yeah, nothing
bring it
more to
on,
say.
baby.
Yeah, let's go. Let's see that 3% mark. So let's summarize here with J&J. 14.65 PE ratio, payout 43%, 5-year dividend growth rate 6.11%, 60 years increasing in 2.93% dividend yield.
You know, guys, I know we sometimes feature J&J quite often on the channel here, but when there are such strong signs for a dividend king, for a lot of investors out there, beginner investors, those that want to start buying stocks right now in 2023, we want to showcase a dividend king like Johnson & Johnson because it's hard to beat the metrics. It's hard to beat the longevity and the history of what Johnson & Johnson's been able to do. You know, and again, like I've even been buying, shares over the last 2 weeks.
Yeah, so you've answered the Johnson & Johnson question. Now, what are you doing about Hormel, Lanny?
Hormel, gosh, what an interesting stock, because the PE obviously is still high at 22, but I wouldn't mind adding at, call me, at 40. Give me a $40 stock price.
Very nice.
What about you?
Yeah, no, I think that's a very fair metric. I think it's a great entry point for me. We don't have any Hormel. I think, is it you or your wife has Hormel?
Both.
There you go. So it's easy for you to set it for 40, pick up a share.
We're European. We love that pepperoni, man.
Yeah, that is true. Yeah, that is very true. So you know what? Maybe this is time for me to look at one of the positions I've been trying to get rid of that doesn't pay that large of a dividend and start moving the funds into a king like Hormel. That's something to consider leaving this video.
Warner Media Discovery. Guys, what are you doing here on these two dividend kings? Have you been scooping up the king of kings, Johnson & Johnson? Have you been nibbling on that pepperoni with Hormel? Let us know in the comments below. And guys, if you haven't, what are we going to do here? Like the video, subscribe to the channel, B.
That's right. That's absolutely right. Again, thank you for the support. Trying to put out some more stuff here, random shorts here, there, some more videos, some other things on social media. So let's just keep going, everybody. Let's reach financial freedom together.
Guys, you're either with us or you're against us. That's Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.